Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. Today we have Ted Patel with us from Astra Capital. Ted is an engineer, syndicator, and investor with tons of experience. He's now in multifamily. We love our multifamily guys. So Ted, thank you very much for hopping on the show.
Thanks a lot. Thanks for having me, Gabe.
Yeah, for sure. I told you before we got on here, we like stories. We like to hear how people got to where they are. So why don't you take us back to the beginning of your story? How'd you get started in real estate?
Absolutely. So maybe I'll just take all the way back. I'll just go to 2000. Yep. After completing my bachelor's from India, I completed my bachelor's in electronics from India and then came to US back in 2000 to do my master's in computer science.
Oh, very cool.
So, yep. After graduating, I started working with investment banks on Wall Street. So I worked with major investment banks, designing trading applications, platform for them. And worked there for quite a few years until 2008 happened.
Yeah.
And as you know, there was a bloodbath on Wall Street in 2008. Yeah. And I also got caught in that vicious cycle of layoffs. At that point of time, till then, everything was fine. I didn't ever think about, leaving W-2 employment. Mm-hmm. But that started a thought in my mind, why am I at mercy with all the directors or the board members deciding
at any moment,
deciding the fate of anyone, okay, go bye. Mm-hmm. So after that, I have never worked as a W-2 employee. I do independent consulting so now and then. Sometimes I did it, but never as a W-2 full-time employee. And I took a break for a while, about 3-4 months after getting laid off. Tried to, figure out what should I do next. Mm-hmm. And I bought a truck stop in Florida. I wanted to get out of the W-2.
Truck stop?
Yeah, that was
interesting. All right, that's cool. I love alternative investments. That's pretty interesting.
Yeah, I brought a truck stop, and I kept it for about a couple of years until
Why did you choose a truck stop? I've never heard of that as a solid investment. Obviously, makes sense for somebody, but why did you go that direction?
No, see, I at that point of time after I was laid off, I was desperate to dive into business. I didn't want to work W-2. I wanted to do some business. I didn't had no experience in real estate. I didn't knew nothing about real estate at that point of time. All right. So the best thing that I found was, I had a few family members who were doing the similar kind of business. So, all right, let's start looking into it. It's good margin. It's good money. All right. Brought a truck stop.
Right on. I love it.
And while I was while I was in this business, I met someone who was in real estate, a friend who became a very good friend. He was into construction. So that after being with him for a while, I was amazed by the opportunity that real estates can provide. And so I started following him. I started I worked for him for free, like 2-3 months, just to know in and out of what he does, how he does, and then in 2012, I did my first investment in real estate.
Okay.
I bought a foreclosure property from sheriff sale. I started going to auctions And I studied auctions for about a few months, like who bids what amount, what is their, risk appetite. And then I started buying properties from auction. First was in 2012, and then, no looking back. Just continued doing
Caught the
fix and
bug.
flips. Yep. Um, for small multifamilies that I buy, if the cash flow is good, I keep it for myself, do the Burr method, and just refinance it. But and everything going well, getting experience in real estate. And then I started doing ground up construction.
Okay.
So till now, till today, we do ground up construction for luxury single family homes as well as small multifamilies, less than like about 15, 20 units, not more than
Interesting.
that.
It's
Yeah.
interesting that you chose luxury because that's usually the price point that most people, especially for new development, they steer clear of just because there's less certainty. Is there?
Yes.
I guess we can go into that after you finish your story, but we should circle back because I'm curious why you chose luxury.
Nope, sure. So yeah, let's circle back on that. And as you said, right, the price point is high, like it's minimum 2 million and above for
Mhm.
those properties. We'll talk about it, after the story. But then back in 2018, I was at one of my construction site, and there was an accident that happened, due to which I had, some major surgeries
Oh
that I had
no.
to go through. And that was like a turning point for me, to think about passive investments. Till now, I was just actively investing everywhere. I didn't had much focus on passive investment, but that got me thinking. That accident, while I was, recovering, um, I thought, like, if something had happened to me, if worst situation, uh, how would my family be financially secured?
Hmm. Yeah,
And
if you're doing only active real estate, once you stop the activity, then the cash flow stops, or the cash infused into your family to everybody who depends on you completely gets cut off. So it totally makes sense.
yeah. So then I started looking into, how I had heard about multifamily investment. I started looking around, went to many conferences, uh, uh, reading books, podcast, everything. And then I met someone who had done it before in one of the conference. He was a young kid, I would say, just graduated out of college before, at that point of time, it was just 2 years after his graduation.
Oh wow, right
And
on. Going out there kicking it.
and he had bought a 160 unit or 162 unit multifamily. He was just telling me, and I was just surprised, like, you are young, just got out of college. How did you manage to pull this through? I've been in the real estate business for a while, and I can't afford to buy 160 by my own. So, but yeah, then he told me the whole story, how he partnered with different people, raised the money, funded the project. So yeah, I learned a lot from him, how to do it. So to just get started in multifamily, I started with investing passively, first of all. I wanted to test the water. I wanted to see, how it is done, like what are the different aspects or that you have to go through. So I started investing passively, but I would say I was one of the most active passive investor.
All right.
Yeah. So who were the sponsor? I had a good relationship with a couple of sponsors, and I always ask them, keep me in loop for all the small things that you do. All
Yeah.
right. You having a meeting with your property manager? Keep me in loop. I want to know how it works. I won't bother. I won't say a word during the meeting, but I just want to
You just
listen.
wanted to learn by osmosis, learn just watching everybody do what they're already doing.
Exactly, exactly. So after a few passive investments, I also started raising for new opportunities and partnered with good operators uh, as a GP. And we have been doing some good deals in North Carolina, South Carolina, Florida, Texas. Are a little bit slow right now due to the market situation, but yes, so far the ride has been good. And during this slow time, we are more focused right now on ground up construction, I would say.
Interesting. Okay. Ground up for multifamily?
Yeah, small multifamilies and the luxury single family houses.
Very cool.
Yeah.
Right on, man. I love that story. I feel like you went to a lot of different places through your journey so far, and it sounds like you got a ton of experience, which is great. And
Yeah.
I love how it kind of started with that first mentor that you just followed for free, because we stress it so many times on this podcast. The best way to learn is by doing things and by watching people do things. And so just you having the wisdom to know that if you could just watch someone do the type of activity that you wanted to become good at, that you would be able to, shorten your learning cycle. That really, I don't know, that's kudos to you. That's a lot of wisdom that you displayed there.
Yep.
Um,
And that's what I believe, right? If you have a passion for something, do that work for experience, not for money.
yeah,
Money will follow.
work for experience. I like that. And it's so true because especially if you work for money, then you're going to jump in too early and you're not going to have the experience. And that's when you lose money.
Exactly.
So
Yeah.
it's a double-edged sword there. Um, okay, cool. Yeah, I love your story. There's a few questions that popped out to me. I'm gonna start with a luxury one because again, usually when people get into new construction, they like to sit in that middle income bracket. The $200,000 to $400,000 house. They love that area because that's where you find the most buyers. You guys chose luxury. Why'd you choose luxury?
So the first thing is luxury is like less competition from the major builders. If I
Oh,
stay
okay.
in the price, yeah, if I stay in the price point, anything below million, I would see tons of major national builders around me would be
And
building.
just
Yeah,
real quick. So you said anything below a million. And so
in
here
New
in
Jersey.
Seattle, $1 million isn't really luxury. It's just I mean, it's a nice house, but it's not there. There are a lot of $1 million houses. So when you say a million, are you talking about coastal cities? Or are you talking about, because it's all kind of relative. What are you referencing there?
No, for New Jersey, I would say if anything, I'm talking about the middle layer homes. Anything below million is
Okay.
like,
Okay.
anyone can affordable homes in Jersey, I would say.
Hmm. Okay.
Okay. If you go with the price point, anything about 2.5, then yes, it becomes the homes with a lot of bells and whistles.
Right. Yep. That makes
Yeah.
sense.
Yeah. So as I said, right, I didn't want to compete with the national builders. And the other thing is, uh, if I can make the same margin with the high price point, it will be less effort for me. Like if I build three houses at 1 million uh, versus build one house at 3 million, it will be less work for me. All right, I'll be able to manage the project wisely, and it will give me a same profit margin, maybe more profit margin, because I'm not competing with some of the local or national builders.
Yep. That makes a lot of sense to me. Um, the main issue that not issue, but the thing that would make me reconsider, make me have a little bit of trepidation going into luxury home building is demand. How do you know that what you're building is a product that people want? Especially when it comes to, the higher price points, people are very specific about the kind of homes they want. How do you ensure that there's going to be demand once the house has actually been built?
So we keep a very close eye on the market, right? In New Jersey, there are only specific areas where we build this luxury home. These are the areas where, uh, I would say the high net worth people live.
Yeah,
Okay.
makes sense.
And we always keep an eye on how much, homes are getting built in these areas, what got sold recently, how much they got sold for recently. We keep a very close eye on, those items. And we are always talking to the broker to tap the nerves, what's selling, what's not selling, what are the different amenities you might want to put, like in luxury home, right? You put maybe a sauna. It might
Yeah, I was gonna
resonate
say.
well with them. Yeah. So like a small room for a dog bath.
Okay.
So those are the things, like if you go above certain price point, people would like to see those kind of items coming in the luxury home.
And is
Yeah.
it usually, are you going by zip code? Or are you going by only places with views? Is it, what specifically are you looking for when you're choosing that location?
First of all, I need to know the location in and out. I
Yeah.
need to know the area. That's the first thing, right? And then what are the average uh what is the average price of the houses around in this area?
Like within a one
Uh
mile, 2 mile radius?
yeah, it depends on the town, right? Like in Jersey, it's all about towns. All are
Ah,
connected.
okay. Yeah.
All right. One town, uh, it's the community in one town might be totally different than the community in the other town.
Yeah.
There are many factors. It might be schooling system. It might be, the taxes of the town.
Hmm.
Some of the towns where there are very low taxes, you expect people to build larger homes because
Yeah. Makes
even
sense.
if they build large homes, they don't have to pay much taxes. Versus if they build the same home in the other town, they might have to pay like 2 or 3 times the taxes.
Makes sense.
Yeah.
Right. So you guys are very granular on location. I love that.
Yeah.
When it comes to, you've already mentioned a few amenities. What are the amenities that you put in luxury homes? You mentioned saunas, which totally makes sense to me. Dog baths is actually something that I would not expect, but now that I hear it, it does make a lot of sense. It's like, of course,
Mhm.
people want a dog bath. It's something that would be cool to have in my house, but I'm not buying a $3 million home.
Yeah. Of course, the wine cellar,
Yeah.
that's one of the other thing. Then home theater system.
Okay.
Yeah. Uh,
And then do you guys stick to a certain bed bath ratio, a certain square footage, or
mm,
do you build them in all ranges from like 3.2s to like five whatevers?
the bed bath ratio is normally 5 plus 5 plus, 5 plus bed
Okay.
or five
Five
plus
beds,
bath
five baths.
minimum. Yeah.
Wow. Okay. That's a lot of baths.
Maybe 4.5 you can say as a five, but yes, minimum at least one bath for one bedroom
Yep. Makes sense.
and one common.
Cool. Well, I love it. Are you guys still doing multifamily, or are you 100% focused on
Oh
the
no,
construction these days?
we are doing multifamily. We had stopped looking at some of the deals last year, but now as the rates have settled down, we have started looking at some of the deals. Um, till now, it was like we didn't had a visibility on how much high the Fed will go on the
Yeah.
rate increase.
Yeah.
But now seems like, it's all maybe if they go maybe 25 basis point at the most. But now we know exactly how to underwrite, keeping, the future rate in mind.
In mind. Yeah.
And yeah. And seems like, it might take a little bit more for the sellers also to realize that the gap between the interest rate and the cap rate is still large, but eventually it will come down. The spread will come down. So
Yeah.
we have started looking into it. Yeah.
That's what we've been dealing with. I invest mostly in self storage facilities, and that's what we've
Mhm.
been dealing a lot with is sellers not aligning their pricing expectations with the current interest rates. I mean, the
Yeah.
interest rate cannot be higher than the cap rate. It's not going to work out. So I feel you there. Uh, nice. So, you guys are still in multifamily. You're still doing construction, or your construction is a main focus on what you're doing. What do you see? You know, the market is a big topic for everybody today. What do you see in the market? Do you think that it's gonna continue to go down? Do you think it's gonna go up? Or what's your crystal ball say for the market in the next, 1 to 2 years?
Mm, If I have to talk on my perspective, I would say market might it's almost stabilized. It will go down a little bit, not more than 5%, I would say. 5 to 6%. That's
Okay.
my take.
Hey, I like that.
Uh yeah. Um, but that shouldn't prevent us from looking for good deals, you
Yep.
know. Because market is always up and down. You have to consider take that risk, uh, you know, uh, uh, and incorporate that risk in your underwriting.
Yep.
So I would say yes, about 5 to 6% market will go down. But on the long run, because of the inventory, that shortage of inventory, I would say, I don't see anything happening like what happened in 2008.
Yeah.
Yeah.
Yeah, the markets are going to go up, they're going to go down, and you got to just keep plodding along. There's good deals to be found regardless of market conditions. So just keep looking out there. For
Mhm.
anybody who's listening who wants to get into luxury home building, what are the top like 1 to 2 tips, suggestions that you'd give to them to get started?
Um, First of all, research your market.
Mm,
You don't want to build a house in the neighborhood, as people say, right? Location, location, location.
yeah.
You want to build uh, the luxury home where there are other luxury homes nearby. You don't want to build in an average community. The other thing is you have to be very specific or very detailed oriented in the amenities and the finishing that you do in the luxury homes, because the people who are going to buy it, they are very specific. They want specific things. If you add one new uh, if you add few new bells and whistles, you will be able to charge much more than what you have invested. Like for
Mm.
example, like recently we built one house. We did first floor full marble flooring, and it just got sold like
The
even
marble,
before it
man.
was in market.
People love that marble.
It's they're specific, right? And not everyone likes it, but who like it, they will spend or they will pay 100, 200,000 more because
Yeah, because it's there. And that goes back to
yeah.
researching your market, understanding who's going to be buying your property at the end. So that makes a lot of sense. Last question. I took a peek at the clock. We are running it down. But I am curious. You came over from India in 2000 after you got your BA. I'm sure you go back there often. Have you ever considered investing in India, or is it 100% US only?
100% US only for now.
Okay.
Initial investments I did in some of the land in India,
Hmm.
but right now I'm just US because I don't plan moving back to India, so I would rather have everything over here where it is under my watch.
Yeah,
Uh, yeah.
that makes sense. Is
So
it? I'm just out of curiosity. Is it easy to invest in Indian real estate, or is there a lot of red tape? What's the general
you have to be very
consensus?
careful. You have to be
Yeah.
very careful. You have to have foot on the ground. If you're buying anything, you want to make sure that if not you, then someone visits the property on regular basis.
Hmm.
Because uh, yeah, you never know whether if it is a land, someone after a while someone might have taken a portion of your land and built something if you're not
Oh wow.
visiting. Yeah, and it might take you years in court to get that thing back. You don't want to fall in that situation.
Yeah.
So
Yeah.
yeah.
That would be unfortunate for sure. All right. Well, hey man, I just took a peek at the clock. It looks like we've run it down, so it's time to jump into the quick question round. Are you ready?
Yep, sure. Go ahead.
Let's do it. Starts with books any form of education, just give me 2 recommendations, one for general life wisdom, one for real estate specific. Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Okay. So for real estate, I would recommend Millionaire Real Estate Investor by Gary Keller.
Mm-hmm.
It has a lot of wisdom, built into it. He interviewed more than 100 millionaire real estate and have, just squeezed all the wisdom into
all
that
the
book.
Juice out of it, yeah.
Yes. Yeah.
Yeah. That was one of the first books I read. Actually, I really liked that book.
Yeah. And the other book I would say is Traction by Gino Wickman.
Okay.
Yep. It's all about scaling your business. It explains you what are the process you can put to scale the business, what are for different segment of the business, like different departments. It's a good book. It's a good read. I just completed it recently.
Nice. I will have to pick that up. Fraction is what you said?
No, Traction.
Traction. Yes, I have heard of Traction. That is on my list, and I still haven't picked it up. So I got to get on that. All right. Next question is for your younger self. So let's go back to the Ted. Let's go back to the Ted of 2008, who was just laid off from his Wall Street job. Go to him, look him in the eye, give him one piece of advice moving forward.
Should have got into real estate faster.
Whoever's counting, add another one, another guest to that list of people who said they wish they got into real estate faster earlier. Everybody says this, and it's a message to anybody out there who has not yet bought their first property. Just get started. Everybody wishes they got started earlier. So take this as your sign. Go out there, start investing in real estate today.
Yep, and don't get into analysis paralysis mode. Just get going. Don't wait for perfection. Yeah, start something. Yeah.
So easy to do. But it's a two-edged sword because you really do want that first deal to make you money, or else you'll get demotivated.
That's true.
But again, it's so easy to get stuck in analysis paralysis and just wait and keep taking courses and keep reading books.
Exactly.
And not doing anything.
And I would say, if you are not confident enough, just partner with someone who has done it before. Just learn from them. Just invest something or get like 5%, 10%, whatever partnership you can do with that individual. Just learn from them.
Yep. Good advice. All right. Next question is about your business. The first 3 positions we hire for form the foundation of our business. So what were the first 3 positions you hired, and would you do it in a different order if you did it again today?
Okay. The first few is the office manager. Mm-hmm. All right. Who keeps track of my scheduling, keeps track of all the documentation. Then I hired a few virtual assistants. Which take care of all some of the researching items, like they do the market research, due diligence, everything, follow-ups. Then the third would be my construction crew, like my contractors.
Mm-hmm.
Very. Want to make I'm very specific with the contractors. Normally I get I just make sure to see their past projects,
mm-hmm.
What they've accomplished, and what time frame they have accomplished. And normally, I always have a clause with my contractors. They have to finish in certain time. There is a reward versus penalty. So if they complete it early, you get a reward. Maybe, and if you complete it late, it's the same, goes vice versa.
Man, that's going to be the soundbite for this episode because I feel like that's really, really good advice. And it's something that I've never done, but I think I'm going to start doing that because it makes a lot of sense. If you don't have that in a contract, then contractors, oh man, we redid a bathroom here and this contractor took weeks with it. And so it was just, it was ridiculous. Should have been a job that took, 4 or 5 days. It was ridiculous, but that is good advice. So if they get it done early, they get a little bit of boost in their end pay. If they're late, then they get deducted. That's a really smart thing to put in your contract.
Yep.
All right. Next question is about the US. It's a big place, a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
For multifamilies, I'm currently looking at Kansas City.
Okay. Missouri, yep. Kansas City, Missouri.
Missouri, yes. Yeah. I've heard, and based on my research, I've found there is still some good cash flowing properties at a rate lower compared to the major markets like Texas, Florida. Mm-hmm. So yeah, everyone is focusing on Texas, Florida, Arizona. Mm-hmm. Maybe I like to focus a little bit away from where all people are piling up.
Yeah, we own a couple in Dallas. I love Dallas, but I've been looking for a deal there for a year and a half now, and I haven't found anything. So those Texas markets are really they're a tough one to crack.
Too many investors. Yeah, too many investors in Texas.
Yep.
And of course, for this new construction, it's where I can go, New Jersey, not out of New Jersey.
Yep.
Yeah.
All right, next question. You've already mentioned this a few times already, and it sounds like it's been a theme throughout your life is finding good mentors. So this question is about mentors. None of us are islands. We all stand on the shoulders of giants. So give me one mentor who's contributed significantly to your career today.
The first mentor that I found in real estate, who has become a good friend, who taught me ins and out of how to evaluate the property, how to do some construction in the property. He was, I would say he's one of my, first mentor. He provided me opportunity in real estate.
I love it. That was the one that helped you out better, that you followed back in 2012, right?
Yes.
Nice.
Yeah.
All right. Next question is your second to last question, and this is about your strengths. We are all gifted with strengths that we uniquely provide this world. So what is your Superman strength?
I would say I'm a hustler. Don't take no for an answer. Anything, yeah. There might be good times and bad times, but the faster you get back on track, that's what I believe in,
Yeah, there's a quote. I think it's from Thomas Jefferson, or I can't remember. Some old person. They said that what is it? The more I work, the more I find I get lucky, or something like that. Quotes basically just don't give up. Just keep doing it. Eventually, you're going to make it. So I like that.
And,
it's a good.
Yep. And there is one more sentence that I remember. With all adversity brings with it the seed of equivalence advantage. So never look like, okay, this is the bad thing. Try to find something positive. It happened for good. Take it that way.
Yeah. Everything is devoid of value. The value is what you give it. So if something bad happens and you look at it and you find the silver lining, then technically it's a good thing for you. Mm-hmm. And that leads us to the very last question, because we are over time here. This one is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you, learn about luxury investing, about all the multifamily stuff you got going on. So what is the best way for people to reach out and get in contact with you?
The listeners can go to my website, astrecapital.com. It spells like ASTRE capital.com. I'm available on LinkedIn, Facebook, Insta, and they can always reach out to me on my email. It is TED at s3capital.com.
Right on. All right. So astracapital.com. I will put that link in the show notes. So if y'all want to reach out to Ted, just click a little more in the description. It'll pull down the full description, and in there you can find Ted's link. All right, man. That wraps it up. Thank you very much for hopping on the show.
Thanks a lot, Gabe. It was a great time with you on the show.
Absolutely. Yeah. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe, at therealestateinvestingclub.com. And if you guys want to support the show, all we ask is you give us a like, subscribe, share, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at Gabe at therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.